Happy Monday, everybody. I hope you had a great weekend. Today is May 23, 2022, and this is your Monday Market Update. As always, recently, another busy week, so let's jump right in. The weekend ended and the week started with economic news from China. Showed how much the lockdowns have crippled the economy there. Not like we haven't seen this before, pretty much everywhere else in the world, but that was 2 years ago. As of this month, we're still seeing lockdowns in China's biggest cities, and the consumer spending and the factory activity showed the worst pace since the depth of the pandemic. On Monday morning, U.S. economic news kicked off the week with the Empire State Manufacturing Index. And though it's often a volatile report, this one was not so good. Negative 11.6 versus expected positive 15. Dig a little bit deeper, the new orders were down, leading indicator, not so good. To see if there was a silver lining, the prices index was also down, prices paid and prices received. Are we seeing peak price inflation? Stocks did open lower, but they held near-term support and moved a little bit higher late in the day before pulling back into the close. The S&P down 0.39%, NASDAQ down 1.2%, and the Dow up just a hair, 26 points. Oil prices did make a move up. We'll keep seeing that at the pump. The end of the day move up on Monday led to some further buying come Tuesday morning. Good news from China for the moment, and upbeat economic data was enough to overshadow the retail earnings that were just horrible. Futures were up before the open as China indicated that their attack on their own tech companies may be coming to an end, and prospects of lockdowns and easing and consumer demand coming back, since the Chinese might actually be able to leave their homes, maybe. Add that to Eurozone GDP ahead of expectations and U.S. retail sales report and industrial production coming in better than expected, and we got a higher open. Walmart earnings and Fed speakers threw cold water on that, and there was a mid-morning pullback. As for the Fed, Bullard downplayed the Russia-Ukraine war and spoke positively about the U.S. economy, so that was upbeat. The market did pull back as soon as Powell spoke, but he didn't say anything new. The market hit new highs into the close. The S&P was up 2%. The 10-year closed at 2.99%, back to that 3% conversation. No matter, the market liked things on Tuesday, good mood Tuesday. As I've described, everyone back to the other side of the boat, and the markets were back down big on Wednesday. More bad retail earnings, this time from Target. It was enough to make everyone who was all over the airwaves on Tuesday talking about how bad the Walmart management team did with the quarter sort of eat their words. Or in CNBC land, spin their words. Target's numbers, like Walmart's, made everyone stop and think, if the consumer is not quite as strong as we've been saying, growth scare again, and stagflation scare. Stocks showed their concern. Dow was down almost 4%, S&P down just over 4%, and the NASDAQ was down almost 4.75%. The S&P 500 did close at a new 52-week low, but it did not fall below the intraday low. Not much comfort, but as I mentioned, everyone who's spent the past 3 years and more talking about how great Target and Walmart are basically forgot everything about that and all but called for the heads of the CEOs. Not so fast. I think you'll see in coming weeks, if not days, more research come out showing that because they did everything right in the past, it was harder for them to pivot so quickly here. But we'll see how that goes. There were some good retail earnings. TJX, parent of TJ Maxx and Marshalls, Home Depot and Kohl's, all with pretty good earnings. So not enough data to say for sure consumer is done with the growth side. Maybe the bar has been set too high for some of these companies. Remember what I've said, valuation doesn't matter until it matters. Maybe it does now. Thursday was ushered in with a gap lower again. After the ugly day on Wednesday, more disappointing earnings, this time from the tech sector. Jobless claims were higher again, a disappointing Philly Fed manufacturing headline. But if you dig into the details like I do, and the market found some good news. Overall, business activity is still expanding. New orders were up. Shipments nearly doubled. Demand is still strong. This economy has not rolled over yet, at least not by this data. The markets fell near the lows from the previous week, but stabilized and churned around a lot. All the major indices closed down less than 1%. Friday began with a little hope as the Chinese surprised overnight with a rate cut, more evidence that even as the Chinese lock down city after city and stick to the zero COVID rant, they will be supporting their economy. Overseas eco numbers were mixed. German PPI a bit hot, and the UK retail sales were ahead of expectations. Stocks opened higher but reversed course and were down until about the last hour. Another lesson in option expiration day. It's not over till it's over. At one point, the S&P 500 was down in bear market territory, down 20%. Down as much as 2.3% on the day, closing the day just in the green, barely. But that's 2.3% higher than the low for the day. The Dow was down over 600 points at one point in the day and closed up 8.77 points. NASDAQ climbed out of a big hole on the day too, but still down 0.3% for the day. As we wrap up the ugly week and look into the new week, here's what I'd like to keep, what I think we'd keep an eye on. The market will probably not stop going down until we get some good news. I'm not sure we can do with the bad news just stopping. We'll need some actually good news. China is reopening, just not yet. It's just not yet reopened. Inflation is peaking, maybe, but it's not declining yet. Commodity prices are not going up as much, but they're also not declining enough yet. The bad news list is long and gets added to daily. Sentiment is extremely negative, in case you couldn't tell, but that usually sets things up for positive moves when there's some good news. And unless you are in the world is ending camp, we know that good news will come. Art Cashin said once that never bet on the end of the world because it only happens once. What will we see this week? Let's start off with a list of earnings. Costco, Macy's, Best Buy, Nordstrom. These are just from the retailers. We'll watch those closely since that was the key to last week's market. We'll also get NVIDIA, Ulta Beauty, and Dick's Sporting Goods. So we have a lot going on this week. From the Fed, we'll hear from the Fed heads again. Bostic, George, Powell, Brainerd. And then the minutes on Wednesday. I don't see much new coming from this, but that doesn't mean they won't move the markets. Remember, their jawboning of the markets can help them keep from making too many rate hikes. And changes. As I've mentioned before, I don't think they'll be able to be as aggressive as they think they will. If they talk the market into doing their work for them, they won't have to. Eco numbers will include PMIs, cap goods, durable goods, personal consumption, and of course jobless claims. Watch out for the big one on Friday, core PCE. I'll remind you that is the favorite of the Fed for measuring inflation. If we're going to see inflation peak, it'll be here. Uncertainty, that's where we are. Retail sales numbers looking good. Some retailers totally missing it, and some doing well. Some companies telling us that they have the supply chain under control, and some not. The market hates uncertainty, and this is how they show it. As Marty McFly said in Back to the Future, watch me for the changes and try to keep up. This market will test your resolve. Keep in touch. Remember that if you are a long-term investor, as you should be, this could be an opening in how to build some great positions in great companies. Please call me. Let's talk about it. Regardless, stay in touch. Keep an eye on the Friday planning video as we go through some great down market playbook ideas. Stay nimble and have a great week.